How to Survive the Recession, Robert Kiyosaki's Last Warning. Millions will be lost. Robert Kiyosaki predicts the massive crash he predicted has arrived. Although this may be an excellent time to become affluent, but how? Whether it will be a recession or a huge depression, a plethora of questions are coming to mind. But relax, Recession has got you covered. Nowadays, safe havens are scarce. As a result of the Fed's aggressive rate hikes, the stock market has crashed. Bitcoin's in the dumps, and the formerly red-hot real estate market has begun to cool. Although it may be tempting to hoard wealth, Robert Kiyosaki, author of Rich Dad, Poor Dad, says that this may be the best time to invest and become richer. Kiyosaki recently tweeted about how he built a fortune by going against conventional wisdom during the Great Recession. After tweeting about a coming crash for almost a year, personal finance consultant Kiyosaki's latest warning warrants some skepticism. But unlike some other negative observers, he openly confesses that he plans to profit from the next sell-off, casting it as a purchasing opportunity as much as a scary prospect. It was a fantastic year to start building wealth in 2008. The entire store was having a clearance sale. He writes, "I've borrowed millions of dollars to invest in cheap real estate." It's worth noting that the author has been predicting a catastrophic collapse too. In 2013, he wrote Rich Dad's Prophecy, in which he predicted a much more severe economic downturn. Here comes that crash. They will kill off millions of people. Have a look at these two resources that could help you weather the storm. Silver. The renowned writer has long advocated for the purchase of gold and silver. Buying gold and silver has been a tried and true way for wealthy people to keep their money safe for ages. They are not subject to the vagaries of the economy because they cannot be created out of anything like fiat money. This time around, though, Kiyosaki is siding with one over the other, and it all comes down to the gold to silver ratio. This ratio is calculated by dividing the weight of silver by the weight of gold. FYI, the first recorded rate of the gold-silver ratio. In the 20th century, gold outnumbered silver 47 to 1. To buy 1 ounce of gold, you'd need 47 ounces of silver. In a tweet from July, he said today, it's 85 to 1. Simply put, the present gold-to-silver ratio indicates that gold is currently more expensive than silver. Even Kiyosaki favors silver for its practicality in industry. As a precious metal used in industry, silver is invaluable. Gold is not. The gray metal is essential in the electrical control units of many cars and is also commonly utilized in the fabrication of solar panels. Silver's industrial use and its ability to act as a hedge make it a promising investment. Many silver mining companies are positioned to profit from an increase in the price of silver. Researching companies like Pan American Silver, Wheaton Precious Metals, and First Majestic Silver should be a good place to begin. Kiyosaki, on the other hand, proposes a less convoluted method. Simply purchase the metal outright. He claims, "I do not touch paper gold or silver ETFs. Anybody can buy a silver coin for $25. The time may have come to check out the bullion dealer in your area." Oil. Kiyosaki doesn't exactly say that silver is safe from the market's volatility, but he doesn't say that it is neither. Last week he tweeted, "All markets crashing. Real estate, stocks, gold, silver, and Bitcoin." However, the current value of one asset is well understood to be strong: oil. Higher oil prices means higher gas prices, which is bad for your wallet. A recent tweet by Kiyosaki: "Middle class wiped out by increased oil inflation." Of course, in 2022, your portfolio will appear better if you have investments that provide you exposure to the energy sector. Though it has dipped in recent months, the price of crude oil is still up 14% so far this year. Consistently high prices for crude oil are good news for the oil industry. Stocks like Chevron, ExxonMobil, and ConocoPhillips, among others, have provided investors with impressive profits so far this year. Although investing in commodities is a risky business, consider some lesser-known alternative assets if you want to protect your portfolio from inflation without experiencing the wild swings that commodity-related stocks are prone to. So what do you think of his forecasts and recommendations? Please let us know in the comments down below, and we hope our video was quite informative for you.